Have you ever wondered why the dollar is used for international trade, why global investments see the dollar as a lifeline, and why central banks use dollar as a reserve currency? After World War II, the U.S. was the strongest economy and held the largest gold reserves. The Bretton Woods Agreement made the dollar the anchor of the global financial system, pegged to gold at $35 per ounce, while other currencies were pegged to the dollar. Even after the gold standard ended in 1971, the system had cemented the dollar's central role. The U.S. has the largest economy in the world, a massive consumer market, and a leading role in global finance. U.S. financial markets, bonds, stocks, derivatives, are the deepest and most liquid in the world, giving investors confidence. Multinational corporations often transact in dollars, making it the default trade currency. In the 1970s, deals between the U.S. and Saudi Arabia, and later OPEC, ensured oil was priced in dollars worldwide. Since energy is essential to every economy, countries need dollars to buy oil, reinforcing its dominance. The U.S. government and institutions, like the Federal Reserve, are seen as relatively stable and transparent compared to many others. During crises, investors flee to the dollar because it's seen as safe haven currency. Because most global trade is already in dollars, it creates a self-reinforcing cycle. Importers and exporters prefer it. Banks hold it. Central banks stockpile it. Investors use it. This network effect makes it difficult for other currencies, like the euro, yuan, or yen, to displace the dollar. About 60% of global foreign exchange reserves held by central banks are in US dollars. Countries keep dollar reserves to stabilize their own currencies, pay debts, and participate in global markets. The dollar became the backbone of the world economy because of historical agreements, the size and stability of the U.S. economy, its dominance in energy trade, and the trust investors place in it. This combination keeps it the go-to currency for trade, investment, and reserves.